Morning, welcome to Ainslie News. Friday the 30th of October. End of month. And end of week. What a week it's been. Pretty tumultuous. Today we're talking WGC's Q3 gold demand and supply, investment surges and jewellery slumps. Another quarter, another World Gold Council gold demand trends report, and as with all things 2020, what a quarter it was. The combination of high gold price and the effects of the pandemic saw a massive bifurcation in the two biggest users, with gold jewellery demand plummeting whilst investment surged, and whilst almost negligible in quantum, we saw the first net sales, not purchases, from gold in central banks in a decade. So this from the report. Demand for gold dropped to 892.3 tonnes in Q3, its lowest quarterly total since Q3 2009, as consumers and investors continued to battle the effects of the global pandemic. At 2,972.1 tonnes year to date, demand is 10% below the same period of 2019. Check out this chart here. Year to date demand on a par with 2009. ETF investment. Quarterly inflows of 272.5 tonne took global holdings of global-backed ETFs to a new record of 3,880 tonne. While the pace slowed a little from H1, sustained inflows throughout Q3 demonstrate the continued motivation of ETF investors to add to their holdings. This chart here showing that movement in ETFs. Pretty popular. Bullion investment. Bar and coin investment jumped to 222.1 tonne in Q3, up 49% year on year. Most major retail investment markets saw strong growth. Through the largest volume increases were seen in Western markets, China and Turkey. This contrasted with continued strong sales in Thailand. The US dollar gold price rose to a record high of US $2,067.15 or 15 cents dollars in early August. This was followed by a correction, with the price closing the quarter around US $1,900 per ounce. Record high prices for gold were also seen in various other currencies, among them the rupee, the yuan, the euro and the sterling. Check out this chart here. Official gold buying surges to a year-to-date record in 2020. Jewellery. The pandemic further impacted the jewellery sector. Weakness caused by the COVID-19 was compounded by record gold prices. Q3 demand fell 29% year-on-year to 333 tonne, while China and India accounted for the largest volume declines. Weakness was global. Central banks generated modest net sales of 12 tonne of gold in Q3. This was the first quarter of net sales since Q4 2010, primarily due to the concentrated sales by two banks, Uzbekistan and Turkey. Buying continues at a moderate pace, driven by the need for diversification and protection amid the negative rate environment. Turkey sold 22.3 tonne in the quarter as it battles to manage its currency and facilitates trades to support its commercial banks in times of high gold demand. Uzbekistan reduced its gold reserves by 34.9 tonne during Q3, bringing year-to-date net sales to 28.6 tonne. Despite the sizable sale in Q3, gold reserves of 307 tonne still account for 56% of total reserves. The country has seen a rise in gold exports this year as it looks to utilise its gold reserves, capitalising on higher prices to combat the economic impact of the COVID pandemic. This graph here showing central banks turned net sellers in Q3, the first time in 10 years. It's a pretty important moment there. And maybe it's continuing. Now onto technology. Demand for gold used in technology remained weak in Q3, down 6% year on year at 76.7 tonne, but the sector saw a decent quarterly improvement as some key markets emerged from lockdown. Let's talk supply. Total supply fell 3% year on year in Q3 to 1,223.6 tonne. Mine production was 3% lower year on year as the industry continued to feel the effects of H1 COVID-19 restrictions. That said, the biggest declines in the quarter had nothing to do with COVID. The stalemate between Barrick and PNG saw the suspension of the giant Porgera mine, and the world's biggest producer, China, post another 3% decline due to implementation of stricter environmental policies. Russia, hot on the heels for Australia for number 2 position, saw a massive 13% decline due to lower grades, yielding less as the easy stuff has already been mined and the record year they had last year. Recycled gold supply increased 6% year on year, with recycling channels reopening as consumers and retailers emerge from lockdown, and its predictable correlation with higher gold prices, as can be seen in this next chart. On a year-to-date basis, total supply remains 5% lower than the same period last year due to the disruption caused by the pandemic. And here's that chart there for showing recycling, and it's jumped there in 2020. Well, we hope you've enjoyed the news. That'll be end of month for us. When we catch you on Monday, it'll be November. And also looking forward to, or not looking forward to, a US election. Should also add some more instability and craziness within the markets. Remember, ainsleyBullion.com.au for all things physical, Ainslie Wealth for all things crypto, and goldsilverstandard.com for our gold and silver backed cryptocurrency built by Ainslie. Enjoy your weekend, and we'll catch you Monday.